on your credit report and you have been told, just wait 2 years, there's nothing you can do, listen closely. That answer may be incomplete because some people wait 2 years for something they could have reviewed earlier. Not every inquiry is the same. Some are connected to application you authorize. Some are attached to account you open. Some come from rate shopping, like auto loan or mortgage. And some may be unfamiliar, duplicated, unclear, or difficult to trace. That is where strategy begins. Now, before you start thinking every inquiry is dangerous, let's slow this down and separate what matters from what doesn't. My name is Thérèse Taguet. I'm the founder of America Credit Care, a credit repair company that helps clients improve their credit profile through structured compliance-based strategy. This is not about promising 24-hour deletion, guarantee removal, or shortcut that could put active accounts at risk. Hard inquiries are normal when you apply for financing. But if an inquiry appears inaccurate, unauthorized, duplicated, or unclear, you may have the right to request a closer review. At American Credit Care, we don't treat inquiries like a random mark to attack. We treat them like data points to audit. Because an inquiry is not just a pull, it is a signal. To a lender, several request inquiry may suggest active credit-seeking behavior. That does not automatically make you risky, but it can create question before funding, business credit, a mortgage, or a major approval. So today, we are not doing panic, we are doing structure. We are breaking down the inquiry audit, which inquiries matter, which ones may deserve review, and how to move without making a reckless decision. Part 1, the inquiry anchor. I call inquiry anchor because they can wait on the way your profile is interpreted. A hard inquiry is usually not the biggest factors on your credit profile. Payment history, credit utilization, age, and overall structure usually matter more. But inquiries still matter because they tell a timing story. They show when your credit file was accessed, and timing matters. If a lender sees multiple inquiries, the question becomes, is this person shopping responsibly, or are they aggressively seeking credit? That is why the goal is not just to remove things. The goal is to understand what every inquiry represents. Who pulled it? When was it pulled? Was there an application? Did it lead to an account? Was it rate shopping? Was it unauthorized? Was it duplicated? Does the inquiry name match the lender you remember? That is the audit mindset. You are not reacting to the inquiries, but you are investigating the story behind it. And the wrong move here can create more problems than the inquiry itself. Because this is where people stop reacting emotionally and start understanding the report. Part 2, permissible purpose. And this is where people often move too aggressively, too early. Now, let's talk about a phrase people hear but don't always understand. Generally, a company should have a recognized reason to access your credit report. That may include a credit application, account review, collection activity, insurance underwriting, employment screening with proper authorization, or another legal recognized purpose. In simple terms, there should be a reason your file was accessed. But that does not mean every inquiry you don't recognize is automatically wrong. Sometimes the name on your credit report is different from the brand you interacted with. Sometimes a dealership sends your application to multiple lenders. Sometimes a lender uses a partner bank or finance company. So the first step is not accusation, the first step is investigation. When I review inquiries for clients, I map the story. What was happening around that date? Was there a dealership visit, a pre-qualification, an application, an account open afterward, a possible identity concern? I've seen people panic automatically because they thought someone stole their identity, when in reality, it was part of a dealership financing event. If an inquiry has a clear explanation, we do not manufacture a dispute. But if it's unfamiliar, unclear, duplicated, or disconnected from known activities, it may be worth requesting clarification. Theme, clear, and structure. This is why investigation matters more than assumption. Part 3, map before you move. Now, this next part is where structure becomes more important than emotions. Before you challenge anything, you need a map. This is where most people make their first mistakes. They look at a list of inquiries and immediately say, I want them all gone. That can be dangerous. Some inquiries are connected to account you open and still use. If you challenge data without understanding what it's connected to, you may create confusion with the lender or trigger additional verification. And I've also seen people accidentally challenge hard inquiry connected to active account they still needed. A clean inquiry audit separates inquiries into categories. Category 1, active account inquiries. These are tied to account you open. Be careful with these. Category number 2, rate shopping inquiries. These may come from auto loan, mortgage, or similar financing events. Category number 3, deny or abandon application inquiries. These may be legitimate, but they should still be understood. Category number 4, unfamiliar or suspicious inquiries. These deserve close attention. And lastly, category number 5, duplicated or confusing lender names. These may require research before action. Once you build this map, the panic goes down automatically. You stop seeing your credit report as the wall of damage. You start seeing it as a timeline. And that timeline tells you what happened, what is connected, and what may need review. And once people see the timeline clearly, they usually drop fast. And honestly, this is where most people finally stop feeling overwhelmed. Part 4, the data environment. Most consumers never report, but the data environment is often much bigger than what people realize. Now, let's talk about the data environment about your credit profile. Some consumers choose to put security freeze on certain secondary data source or specialty report as part of broader identity or data protection. That can be legitimate, but a security freeze is not a magic deletion. Switch. It does not guarantee inquiries disappear. It does not automatically block every verification pathway. What it may do is helps you manage access to certain consumer data source and reduce unnecessary exposure depending on the situation. The goal is to organize the profile and protect the consumer. Strong credit work is not about trick. It's about documentation, data control, and responsible review. Part number 5, the direct review approach. Now, let's talk about how to approach this professionally instead of emotionally. How to approach the credit bureaus, lender, or furniture. The internet loves aggressive language. Demand delation. Call the fraud department. Make them remove it. That may sound powerful, but reckless pressure can create problems. A professional approach is firm, clear, and documented. You might say, I'm reviewing my credit report and I'm seeing an inquiry I do not recognize. I'm requesting clarification regarding the permissible purpose and any supporting documentation connected to this inquiry. If you believe the inquiry was unauthorized, say that clearly. If it may involve identity theft, follow the appropriate identity theft process. If it's either lender or dealership confusion, gather the proper documentation. Your job is to create a clean record. Who did you contact? When did you contact them? What did they say? What document do you have? That record gives you structure. The goal is clarity. Part 6, the account trap. This next section can save people from creating unnecessary problems. This is the part I need you to hear carefully. Do not treat every inquiry like a target. If an inquiry is tied to an active account you open, be careful. That inquiry may be part of the record connected to that account relationship. Before action, ask, did this inquiry lead to an account? Is the account still open? Is the lender relationship important? Could challenging it create confusion? Do I have documentation showing whether it was unauthorized or inaccurate? A reckless person attacks everything. A strategist review first. The goal is not to make the report look artificially clean. The goal is to make the report accurate, organized, and understandable. Part 7, dealership and rate shopping confusion. Now, let's get into the inquiry situation that confuse people more than anything. Almost anything else. Someone walk into the dealership thinking they are checking one financial option. Then they get home and see multiple lender name on their credit report. That can feel shocking, but sometimes dealerships submit application to multiple lenders depending on the scoring model and timing. Multiple inquiries for the same type of loan within a short window may be treated more favorably for scoring purpose. But the audit still matter. And here are the question to ask. Was the inquiry part of one financing event? Was they authorized? Were they for the same type of financing? Was it placed inside the expected timeline? Were any name unfamiliar? Did any inquiry appear outside the event? No panic, not assumption, just questions. And if something does not line up, it may deserve a closer review. Part 8, real client moment. And this is where the emotional side of this becomes very real. I've worked with clients who felt violated after seeing inquiries activity they did not understand. Once told me, Therese, I don't even know who those companies are. That feeling is real. Your credit profile represents access, reputation, and financial option. So when unfamiliar name appear, it can feel like someone walked into your financial house without explaining why. But emotion cannot be strategy. The strategy is review. We slow it down. We build them up. We separate what is connected from what is unclear. We gather documentation. We decide what deserves formal review. And once people see the timeline clearly, they stop feeling powerless. That is the shift from confusion to control. So when you step back and look at the full inquiry timeline, if you are preparing for funding, business credit, or major approval, the last thing you want is confusion sitting on your credit report. If your report has inquiries you do not understand, or if you are preparing for funding and want your profile review before you apply, America Credit Care may be able to help. When I'm reviewing inquiries for clients, I'm not looking for random things to attack. I'm looking for structure. Which inquiries are connected? Which ones are expected? Which ones may be unclear? Which ones may deserve follow-up? And what is the next best step based on the full profile? If you want me to look at your report the way I review reports for my client, click the link down below and schedule a personal credit strategy section with us. We will review your inquiry timeline, your profile structure, and the area that may need closer attention before your next major move. My name is Therese, founder of America Credit Care. Hard inquiries are not always the enemy. Confusion is. And when you replace confusion with structure, you stop reacting to the report and start managing it with intention. And I'll see you in the next video where we are going to talk about hidden lenders and why most funding opportunities depend more on structure than most business owners realize.